Hi, welcome to the Oak Trader Report on the 24th of February. It's 10:43 in the evening in Hong Kong and it's 9:43 in the morning, and a cold one at that, in New York. I just wanted to put some ETFs that are listed in America today, just to get an idea of what's going on in some different sectors and how it looks on an ETF chart. Sometimes little clues are available as to where markets are going in the main from these ETFs. I don't necessarily trade these particular ETFs. I do with some of them, and I try and stay away from ETFs if I can. I'll trade futures, I'll trade shares, I'll trade other alternatives if I can find them, and if I can't, then I'll trade an ETF. The first one I've got up here is a shipping ETF called Guggenheim, ticker SEA, and it was one that I was tracking a while back, and it was quite a new listing out, and you can see how it's snaked along and it keeps moving up. It hasn't really had enough time here through this accumulation cycle where my mouse is, but it does look like it's accumulated quite nicely and it's moving up. With these markets that haven't had a tremendous amount of accumulation time, I'm always very wary of them turning around. So I'm always very wary about the breaking of downtrends, although I expect one downtrend to be broken before the big move starts. So I have to factor that in. But if I draw a line here from where my mouse is, from this pivotal point to this one to this one, we've got a nice uptrend line to follow, and so long as it doesn't break that, then I won't sell out my positions. And if it does break that, I will sell out, just to be on the more cautious side, and I'll wait again to see if it reaccumulates at around this level, because again, when it hasn't had that amount of accumulation action, turnarounds can happen quite violently, and you have to be aware. And on the other side of the coin as well, you can get some very nice moves from markets that don't accumulate for a very long time. It depends on how much they were beaten up and how irrational the move was down in the first place. As you can see, it was a very, very hardcore move down, down from 29 all the way down to a low of just above 13. Global Carbon ETN iPath, GRN. I think Barclays are in control of this one, the carbon market. As you can see, the integrity of Barclays here when they released the ETF and were promoting it heavily. It was up around the 55 level, and it had a nice steady drop pretty much from the first month and a half onwards. For about the first month and a half, it probably tricked a few people into buying it. The market went right down to 15, consolidated during its downward cycle, and you can see these spikes up and these quite wild swings during this cycle here, signaling that it was probably a continuation of the downtrend, also by its upward trajectory as well. And that's why I say you have to be very careful of short-term accumulation areas, and also never to get these downtrend consolidation areas confused with uptrend consolidation areas. And you can see, if I draw a line here down, it breaks a heavy downtrend here, and the market is very tight and very boring. And this, to me, where my mouse is now, if you can look on the screen, this signals accumulation here to me, whereas this didn't. This was too wild, and this was a little bit wild and could have got fooled, but it really wasn't long enough, and it didn't break above this area of action, so it didn't show strength, whereas this market is breaking above that area of action. And if it can close out the end of the month higher and stay this high, and I want to see the market close at the end of the month above all these other highs during the consolidation accumulation area, and if it does that, then it will show good strength to me, and perhaps we can see a nice upward move develop to around the 14 or 15 level with this particular market. The biotech sector from the S&P, you can see, if I draw a line here, one line for the uptrend, steady and gradual, and then the other line starting here, if you draw it up, all the way up. It's quite a steep uptrend, and this is where you get the very steep parabolic uptrend beginning here, with these two spikes here, which are unusual. And the reason why I've put this up here is because this is a signal to me to be beady-eyed and watch this market now for distribution. It potentially could go a lot higher from here. When a market spikes, you have to be very careful because it can have irrational spikes quite high. You've got to wait till some distribution takes place and some wild swings. But the behaviour of the market with these two swings in the last couple of months has really differed from previous behaviour, apart from maybe this spike here where my mouse is and this spike. But even so, these spikes were much bigger than that, double the size, and that signals to me that a bit of action has come into this market, and one should be wary if you do hold stocks in the biotech sector as well. If any of them are breaking longer term downtrends or having quite violent swings, be very careful with any long positions, because this market looks like it's shaping up for the distribution cycle. But again, the distribution cycle could take place just below 200. When a market's spiking like this, as I say, it can reach very high levels. It's just the main reason that I wanted to put it on there was so it goes on the watch list for a sell. Ticker KWT, the solar energy market ETFs, and you can see the downtrends being broken here. You draw a line with the mouse all the way down. This area is just poking above it where my mouse is now, and this looks to be beautiful accumulation action here with a little bit of a head and shoulders as well. And you've got gradual downtrends being broken, and it looks to be moving higher, and the market should gain some traction and move much higher from here. I know the solar market's been beaten up a lot. There's been a lot of negative publicity about it in the last 3.5 years previously, but costs have come down tremendously, and there are a lot of government cheerleaders out there offering various different grants. So I feel that this industry here, from a fundamental perspective, has the opportunity to do quite well in the next couple of years. But from a chart perspective, it's looking very hot. It's looking very good indeed, and I suspect that over the next year or two we'll see this market move much higher from here up to the 100, 125, 150 level, and then perhaps we'll have to re-evaluate it from there. But it looks to be building very good strength here for a very strong move upwards. Ticker ITB, the US Home Construction Shares Index, and you can see the result of the US downturn, the housing crash, supposedly just a subprime crash, and you can see the effects it had on the American market, the construction sector, and it hit the bottom roughly in 2009 with the main equity markets. The gradual uptrend broken, and the market coming down to almost make a double bottom slightly higher than the last bottom to make a nice pivotal point. And where my mouse is now, if you draw a line up to there and then you draw a line down here, it makes a beautiful little triangle, and this move here where my mouse is the breakout move, and it's been in a nice uptrend ever since. And if you draw a line along here, I believe that this was the first long-term uptrend to be broken here. With this, they've probably collected some more shares here. The market's edging higher, and I suspect the market will go up to 26, 28, 30 in the next 6 months. I think the market is moving much higher from here. It's shaping into a nice bullish triangle here if you draw a line along, and you've got the line down here, and it looks like it's going to break out again. It could have some sort of shakeout or some sort of false move, but I believe the market's looking pretty good from here, and I'll show you it on a month. If I got the monthly, I might have it on a next slide that I've got, but I'll just show it to you again on here just to be 100%. You draw a line along here, and you can see that this move here where my mouse is has broken up. And again, I'd like to see it close, say, at 26. If it closes at 26 and stays there at the end of the month, then I would be pretty confident that this market's going to have a very strong bullish move over the next 3 to 6 months. We talked about uranium a couple of weeks ago, 3 weeks ago, from a futures perspective on the futures chart. This is an ETF chart of uranium, ticker URA, and you can see the gradual downtrend here making lower lows, and then it just looks about here, and this point here where my mouse is, the market seems to be curving around. And if you draw lines, you've got downtrend lines being broken all over the shop, and even sideways trend lines being broken, and it is shaping up very nicely at the moment, and it looks like there's going to be a huge bullish move in uranium, but because of the level of time that it's been down here, I can't be certain of when this will happen, but I am certain it will happen at around these levels. I don't think it will go much below 15. It may stay around these levels for another year, but this is a trade that's got very minimal downside risk and massive upside potential, and it makes a lot of sense to go long this market once perhaps these shorter term gradual downtrend line is broken just above there. But it's looking very, very bullish at the moment, the chart, but I would like to see a little bit more time here on the downside, building a foundation to garner strength for the future. But yeah, I can see this market easily moving up to 20, 25 in the next year or two, and it may take another 6 months of mucking around before it takes off. And I thought that with coffee. I put a chart up of coffee a few weeks back. I'd called the bottom pretty much on the coffee market, but I was waiting for a little bit more foundation to develop, and then all of a sudden it's just took off and it hasn't come back. But again, sometimes with markets like that, you can't use one and look at the other market and think, right, I'll jump into uranium. Because coffee's had a big blast upwards, uranium may well do as well, and it might well, but generally I like to see a little bit more accumulation here before I would start going long heavily in this market. But if you are somewhat of a value investor and you're not really interested in time frames and time in the market, so to speak, then this would make a very good value trade. Looking for value in terms of a long-term position trade, you could stay in this trade for a year or two and look to lower your capital gains. Ticker FAN, Global Wind Energy First Trust, another market that's been beaten up alongside solar for good reasons. A lot of it never made sense because of the costs and the government grants attached to it, but because of the activity in the industry and the available grants, prices have come down significantly, and there are a lot of countries now like Germany and Japan, even though Japan, aren't really doing that good a job of it, but Germany is of setting the trend, and there's a lot of projects around the world looking to take off. Whether you think the industry is good or bad, the chart's looking pretty good. You've had a long-term downtrend being broken. And then also, if you draw a line from here, the sideways line's being broken, and it's shown tremendous strength here at this consolidation where my mouse is, and then up again for another consolidation, shown tremendous strength, and it looks to me like it's going to break out and sustain a bull movement up to 14 or 16 quite easily in the next 6 months to a year. Aha, this was the weekly chart that I was looking for before. I showed you the monthly chart, and this is the weekly chart, and I wanted to show you the bullish triangle that looks to be developing here. If I draw a line with my mouse, if you see where it is here, and then draw a line down, it looks to be quite a bullish triangle here, a breakout triangle, and we should see the market move higher. To be 100% confirmed with this, I would like to see the market close above, say, 26, above these previous high areas, showing good strength, the Livermore principle of showing strength, moving above highs, and blasting away anyone else that's the opposite side of the market. And as they cash out and panic, the market moves higher and higher. But it does look to be in quite a solid bull movement, and you can see it's already gone up roughly 215% before the uptrend was broken, and this to me just looks like another consolidation area. But again, I'm always wary in case the market does drop out, and I would use this as my dropout point. Draw a line here to here, and if the shakeout went below 23, then I may consider I'm wrong and I would sell out of the market. As we talked about in the podcast about Jesse Livermore, no market's worth destroying your account for. It's always better to sell out and wait for more price action to develop, and then you can always go back into the market. You don't need to risk everything you've got on being right on any one single trade. The Brazil index, main market in Brazil, and you can see it pretty much did what crude oil did. It topped out really with crude oil and the other commodities, and had a huge spike upwards, massive move downwards, and it's been consolidating. And as commodities have fallen off in price in the last couple of years, so has Brazil, and the advancement in the commodity price over the last decade have covered up the cracks in Brazilian policy and regulation, and they really need to get their house in order. We talked about this about 7 months ago, I believe. They need to introduce lots of different measures that would attract foreign investors, and also their young people feel very disenfranchised. It's very hard to start a business and raise capital there as an entrepreneur. And they do have the whole 9 yards, even if they can just get it a little bit right, Brazil, one day in the future. I'm sure the market would make a very good place for your capital. But until then, until government policies really change, things are looking quite dire over there. They've got the World Cup coming up this year, and then the Olympics, so it would be a good time for the government to show the world that they're not looking to follow the path of Argentina and change some of their policies and regulations. This just here looks to be like a distribution triangle if you draw a line there and down, and then it's dropped out of it below the pivotal point, it's come back up and it's dropped down again. The momentum for this market, if I was a betting man, which I guess I am, but I don't think I'll take a position on it, is down. I believe it's going down some more, although on the daily chart it does look like it's breaking somewhat of a downtrend, so I would be cautious about that. But the momentum does look down, but on the daily it does look like it could have maybe a couple of months going in the other direction. But there was some great moves to be had back in 2003, 2004. If you look where my mouse is, perfect downtrend being broken, the market showing strength by moving higher, uptrend developing, draw a line, and then the uptrend gets steeper and steeper and then parabolic, and you can see the wild swings in the market where my mouse is here compared to previous action in the past. And there will come a time again when Brazilian stocks look really good. There are a couple of individual stocks there that are looking quite good, but this type of rally is the type of rally that people like Ike Batista and other people like that we've got them in every country in the world, think they're the best thing since sliced bread, and they become too leveraged, and as Buffett says, we find out who's been swimming naked as the tide goes out, and he certainly was swimming naked. Too much leverage. And you can see here with the commodity price coming down, the Brazilian market's come down as well. And if the crude oil price was to fall further, a lot of their projects, their deep sea drilling projects off the coast of Rio, are going to look in jeopardy because of the price to cost ratios. So they've got a lot of problems there. They're really going to have to sort out their system of governance and bring in some decent regulation and allow people to invest in the country, which they do in all fairness. I think you can invest 80 grand and get a residency permit there, but apart from that, you're just entering into a quagmire of licensing and flapping around. Who wants to have a business idea and spend a year getting the necessary licenses to even be legal? That potentially is a little bit of an over-exaggeration, but that is the general state of things in Brazil at the moment. And this is the small cap index, struggling to raise money, and it's not doing much better or any better than the main index. And this one here, again, the momentum looks like it's down. Could have a short-term bounce, but it does look to be in quite a solid downtrend. And until it breaks this bigger downtrend where my mouse is here, at some point in the future, I can't say that this market has turned around technically, and it still looks to be negative. And here's Turkey, another country that may join the list of Ukraine, Venezuela, Thailand this week. At some point things are going to really kick off, I believe, in Turkey. You've got a massive divide in the country now between people who live in the city and the countryside, so you've got that dividing line that separates people, and you've got a prime minister that has completely different opinions to the people that live in the cosmopolitan cities. So this really doesn't look good, I believe, for the long term. Again, in 4 or 5 years it may look quite good, or 2 or 3 years, but at the moment I wouldn't be touching Turkey, even though it's reached this double bottom here, this pivotal point of 40. I would not be going long the market. Of course it could have a rally up to 50, but I believe that the next move would probably be down at some point in the next 3 to 6 months, simply because of the political situation. It's going to kick off there at some point in the next 3 to 6 months, between the people and the government again, and hopefully they can sort it out without having huge problems. But again, if they manage to do that, we'll see it in the price action with the market stabilizing. But I believe this market will head lower, and it's not something I'll trade, but if it does break 40, I may well short the market. The S&P Russia Index, RBL, as you can see the pivotal points here, the 23, 23, 23, it's hit that 3 times now, but it does look like more of a distribution triangle rather than an accumulation triangle, simply because of the length of time spent in the bottom areas, which is pretty much nothing. It hits it, goes up, hits it, goes up, hits it, goes up, and it's hit it almost again. It hasn't come down as far, and it's going up. Are people, being trained with the Pavlov dog technique potentially? It does look like a distribution triangle, and longer term I am quite negative on crude oil. A lot of Russia's profits are derived from energy, and I can see crude oil perhaps in the next 2 months taking a dive. It's had a rally in the last 3-4 weeks, but again I think the market longer term is heading down. How is this going to affect Russia? I'm not too sure. And is this one of the reasons Russia really hasn't retaliated at the moment concerning the Ukraine, because of the state of their economy? Perhaps they're willing to play ball a little bit more because their economy is in quite a fragile state at the moment, and that's the reason we're not seeing too much retribution from Russia concerning the Ukraine. With the Winter Olympics finishing today, perhaps we'll see some more action tomorrow from Russia, and there might be a potential split in the Ukraine, and that won't be good for the Russian market. But I think the main detrimental factor longer term for the market is energy. A lot of countries are finding their own oil reserves, fracking reserves, with new technology as well. I'm not saying the Russians are going to become irrelevant, but they're not in the same situation we've been in the last 10 years. The world has changed in that respect, and I'll be looking out. If this does break 23, I may well short the market, because it does look like somewhat of a distribution triangle, but I don't try and everyone does, but I try not to make any solid judgments off any anticipation arguments. That's all they are arguments at the moment, in terms of it could do this, it could do that. I always like to look for price confirmation, and then once I've seen price confirmation, look for that to continue, or look for that to be a trap. The Latin American Top 40 Index, iShares, you can see the distribution triangle here dropped out. If you look where my mouse is here, you can see the triangle, distribution triangle, coming down, spiked up, now coming down again. Could see it move back up to 35, but it does look like the momentum is down with this market, and you can use this line here down to stay short this market. And with the problems in Venezuela at the moment, and various other areas of Latin America, and indeed even Central America, you're going to have a lot of problems in the foreseeable future unless they start getting their house in order, because it's all very well when times are good and commodity prices are high. It's easy, as I said before, to iron over the cracks, but they're going to have to introduce some big changes. And I've seen Mexico in the last 3 months, they are trying. There's been a lot of delegations going over from the UK, and they are trying to sort out their business sector. So Mexico, potentially we'll look at that in the next couple of days as well, see how their shares are getting along, and see the bargains that are available over there. This looks to be in a downtrend, and it looks like it's going to continue. And again, I wouldn't be trading it. Switzerland, you can see this point here where my mouse is when they started fiddling with the currency. And I can understand in some ways Swiss business was being killed by the Swiss franc just increasing in price every day, and they've managed to bring the price of the franc down, and that's given their stock market another boost. But as soon as the world starts having issues again, major issues, we're going to see the the Swiss index move down, and the Swiss franc probably move much higher again. I'd be looking out for this market. It's gone kind of parabolic here, it's moved up, looking like it might be a bit of a distribution area here, but until it breaks some uptrends, I wouldn't be shorting the market as yet. But when this market comes down, the Swiss franc will go up normally. Again, the correlation sometimes can't be 100%, but when it does go down, in history the currency normally moves up. So it's something you have to bear in mind, that the Swiss franc is seen as a major safe haven during times of economic crisis, and the Swiss stock market is at an exceedingly high level at the moment, and I believe this market won't stay here forever, and we just have to wait for some of these uptrends to break. Yeah, I just thought I'd put a picture of the United States here. 36% snow coverage in terms of this satellite, or I'm not sure if it's 36% North America rather than the United States, but you can see the whole swathe of the country enveloped in snow and ice. They're having an extremely bad winter there. Japan's had a once in a 100-year winter. The UK's had severe floods, and there have been a lot of countries like Australia that have record temperatures during their summer. So we're seeing a lot of temperature variations in the world, and America at the moment is experiencing quite a lot of coldness and ice. And the reason I brought that up was I've read an article about 10 years ago. The probabilities of another ice age are much higher. There's evidence to suggest that ice ages occur once every 10,000 years, and I'd read a lot of information about global warming. They seem to have changed it to climate change now rather than warming. Now, it doesn't matter what the science is. One of the scientific facts out there is that ice ages do happen. I'm not saying that this is an ice age or whatever. It's going to continue that way, but that is a threat to North America, the UK. At some point in the future, there could be another ice age. Check the science facts for yourself to look into it, and you'll find that that's far more relevant than what they're talking about at the moment about global warming. And a lot of these events can't be attributed to global warming. Probability and chance, randomness, events do happen together around the world. Once in a 100-year events seem uncommon to us, but they're not uncommon on a probability scale. But I just thought I'd put this up there because people do talk about an ice age at some point in the near future in North America and in Northern Europe as well. And as traders, we always have to be on the lookout for every eventuality. Okay, I will be uploading some more details concerning some ETFs in the Forex sector in the next couple of hours. And I'll speak to you soon. Over and out for now.